You're listening to AI Prism from Seoul Economic Daily.
Before you sign anything, here's what changed in Korea's property market this week. Nationwide apartment sales fell 30% in May, from 78,209 transactions in April to 55,023. The multi-home capital gains tax exemption ended May 9th. That deadline drove the April surge. Now it's over. June brings 29,274 new units to the subscription market, more than half in Greater Seoul. It's Tuesday, June 2nd. Let's look at what's happening in Korea's property market. Korea has a capital gains tax surcharge on owners of multiple properties. That surcharge was suspended for several years. It came back on May 9th. Sellers rushed to close before the deadline. April hit 78,209 transactions. Then May snapped back to 55,023. That's the lowest volume since March last year. Seoul fell from roughly 17,000 monthly transactions to 12,549. Gyeonggi Province dropped 32%. Regional cities like Daegu and Busan fell 29 to 44% from their February peaks. Gift transfers followed the same pattern. April hit a three-year high of 6,036. May dropped to 4,080. The government made one new move. Starting May 29th, non-resident single homeowners, Koreans living abroad, can now sell properties in regulated zones without the usual residency requirement. The data so far shows no pickup. Land transaction applications in Gangnam and Songpa on May 29th and 30th were below pre-policy daily averages. Part of the friction is bureaucratic. Koreans in Atlanta face a July 13th consulate appointment wait, over a month away. On new supply, 29,274 units enter the general subscription market in June, with 15,612 in Greater Seoul. The largest single project is Jangwi Prugyo Mark I in Seongbuk, Seoul, 1,032 units available. In Incheon, the Sharp Geodam Lake Park is a 2,857-unit project with price cap regulations applied. Longer term, the government's greenbelt housing plan, 50,000 units across 4 districts, is moving unevenly. Seoripul in Seocho, southern Seoul, completed zone designation and accelerated its target to unit subscriptions by 2029. Properties near the Seoripul zone have risen 200 to 300 million won, roughly 145,000 to 215,000 US dollars, since the plan was announced in late 2024. The May volume collapse is a policy-driven hangover, not a price crash. Experts are calling it normalization. But thin transaction volumes mean individual deals carry outsized influence on reported prices. Volatility risk increases when few deals set the benchmark. Watch July. The government's post-election tax reform announcement and the Bank of Korea's rate path are the two variables that matter most. What to watch? July, tax reform announcement, property tax restructuring expected post-local elections, Bank of Korea, rate path, 5-year fixed mortgages already at 4.32 to 7.31%, ceiling could approach 8%, Seoripul subscription timeline, first concrete delivery date confirmation from LH, that's today's AI Prism, real estate. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifra award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.